JBlog 20th of January 2010. So I'm just wondering how many fellow bears are out there. I'm looking at this chart. This is Dow Jones Industrial Average for the last year. And every day I'm looking at this chart and I'm getting sick and sicker and sicker and I'm ready to quit. I'm ready to give up. I don't want to be a bear anymore. Every morning I get up and I hate myself for being a bear. I mean, how can you go up against a chart like that? It's drawn with a ruler. It's a straight line. It's pathetic. And yet, I continue being bearish. And I just can't help myself. So, I continue looking for hints why this can't be right, why this can't be working. Or I am looking for reasons why I should be wrong. I'm looking for reasons why I should be buying things. I'm looking for reasons why I shouldn't be shorting things. What reasons are out there? Every day, as I said. So the question is, if you're a fellow bear like me, how do you keep going? How do you keep on that path that says this is all wrong? Looking at the S&P 500 today, of course, today was one of those days. Oopsie. Computers. One of these days where us bears were once again rewarded for a little bit of patience, even though the market did pull up in the end, of course, and wiped out some of those gains that us shorts made. Here's the S&P 500 for the last 6 months, but I do want to draw your attention to technical non-confirmation here on the RSI. The RSI is decreasing, so even though the market is making higher highs, the RSI is not making higher highs. Similar things, the MACD is rolling over, stochastic is dropping below 80. The OBV on the S&P 500 is still pretty strong, but what I do find interesting is if we're looking at the New York Composite, which means all stocks, then we actually have a dip below here, and it actually did stay below. So the composite is a lot weaker than the S&P 500, which means that even though the S&P 500, which can easily be traded in futures, has gone up and has gotten support, the smaller stocks that probably make up this part that dropped below are not as nearly as strong towards the end of the day as the S&P 500. The VIX had a little bit of a bounce today, but still it's in ultra bullish territory. It is quite amazing on how it just keeps going. Let's have a look at that S&P 500 on just what happened during the day today. So we had the big drop in the morning that was affected by China possibly cutting stimulus, and then starting at about 1:30 we had a slow climb up from there. So that was the action of the day. It was basically the complete inverse of yesterday, where the market simply went crazy for no particular reason, at least no particular reason I could detect. Other things that I see, well, yeah, obviously we have the VIX, which says complete complacency, never a good idea. One thing that happened today that is very interesting is the US dollar had a big spike on it, mainly due to a drop in the euro. Now, those of you who are following international news, of course, know that Euroland is made up of many little lands who all have their own little governments, and of course the Greeks have been very bad. But besides the Greeks, the Spanish, the Portuguese, the Italians, the Irish all have been very bad, and they've been running huge deficits. And the big question is, how long can Germany continue to cover this? Because let's face it, that's who's paying the bills. everybody else. Germany, France, perhaps England, some other communities that are doing better. But the question is, how long can Germany basically keep this euro together? There are some doubts about that. And that seeing that it's either the euro or the US dollar, money flows out of the euro and it flows into the US dollar. Core sectors, two things have caught my eye. Three things actually. Here's the Internet Index. This is a year chart. Internet Index has gone down quite dramatic. We might be looking at a 1030 crossover right here. That is very interesting. Another one, this is Semiconductor Index. Semiconductors again have had a drop, and that's after Intel's so-called very good earnings. And yet the semiconductor index is still dropping. Of course, it had a large run up, but maybe there's some doubt forming here. Other things, this is the China index. Well, it's not the whole China index, it's one of the A-share funds, and this is what's supposed to save the world from itself. I don't know about you, but that chart really doesn't look that bullish to me. I don't know what the rest of that market looks like, but if I saw a chart like that, I certainly wouldn't be mortgaging the farm. And then we have a 3-year chart of the Dow Jones Industrial again with this nice straight line. And if you look through, I've got 4 pages of ETFs, and there's at least 20 charts that look exactly like this, which means that there's no individual trading. Everybody's bulk trading ETFs. They're buying futures, driving prices higher with liquidity. And of course, liquidity ends one day, and that is basically what keeps me bearish, is the fact that liquidity does end one day. Other things of interest, again, one of my favorite writers here, Rosenberg, David Rosenberg, quoted some of the leading economists, Wall Street economists, all being ultra bullish. Amazing garbage that is actually coming out of people. Like, for example, this Scott Black saying that 17.3 times earnings is the historical norm for the S&P 500. That is complete nonsense. 15 times from whoever. 15 times earnings seems about right, blah, blah, blah. I don't know who comes up with these numbers. You can't even check simple internet statistics. They're expecting 5 to 10% growth, and that's of course what the market is planning in. Just as a reference point, here is the actual S&P 500 P ratio done by Robert Schiller, Yale Department of Economics, and he puts the median at 12.87 and the mean at 16.35. But if we exclude this last bit here, the 2000s, the quick money of the 2000s, basically the Greenspan era, then our actual real S&P 500 PE ratio is quite a bit lower than once we include this. So historical norm, no, I don't think so, not at 17. So that continues keeping me bearish, and I don't know, I just can't get myself to buy anything, except for that I did pick up a bit of gold today. It looked cheap. I liked it, so I picked up some. I'm planning to trade into a larger position in gold because it's a hedge against paper currencies in general, and it's never a bad thing to have around, both physical as well as paper gold. So that's what I did today. Outside of that, I didn't really do much of anything. Hope you have a good week and happy trading. Good luck.